about modifying a trade. To do this, simply right-click on the trade you want to modify and click on Modify or Delete. This will bring up the order window. Here, you can adjust your...
Hello, everybody. As always, good morning, good afternoon, good evening, wherever you are in the world. I am Coach Paul, and this is the Hola Prime Market News Update. The U.S. equity futures markets continued their bullish sentiment today. S&P 500 futures gained 0.8%, reaching the 6516.5 level, which is only about 8 points off the all-time high that we set recently. The Nasdaq behaved similarly, gaining about 1% on the day and currently trading at 23,711. The Dow Jones followed suit, gaining about 1% and trading at 45,700. As for international market news, on the global front, U.S. President Donald Trump signed orders sealing the Japan tariff deal with a 15% rate and is preparing to start a North American trade deal negotiation. A few pieces of Japanese economic data released this evening, starting with average cash earnings year over year increasing 4.1%, more than the forecasted mark of 3%. Japanese household spending year over year came in at 1.4% below forecasts of 2.3%, while the month over month figures came in at 1.7%. Lastly, Japanese overtime pay increased from 0.9% to a whopping 3.3%. The U.S. dollar continued to show some broad-based strength today amongst the futures major currency pairs. For the Euro USD fell 0.11%, closing at 1.1657, which is right above the 50-period EMA on the daily chart. This is the third day in a row that buyers were able to close above the 50-period EMA, and for the third week in a row, we are showing support at the 1.1625 level. Strong resistance is also evident at the 1.175 level in this same period, a sign of relative congestion. CAD USD logged a 0.2% loss and is currently trading at 0.724, while the Great British Pound was relatively flat today against USD, losing less than 0.1% and currently trading at 1.344. The Swiss franc fell 0.2% versus the US dollar and is currently trading at 1.2424 as of this writing, while the Japanese yen lost about 0.3% today and is currently trading at 148.43 yen to the US dollar. AUD USD dropped 0.4% on the day, closing at 0.6518 and currently trading at 0.652. Lastly, the New Zealand dollar continues to remain in its larger bearish channel and lost 0.5% against the US dollar today. The pair currently sits at 0.585. For our crypto update, cryptocurrencies logged some losses today. Bitcoin is down about 0.56% and currently trading around the $111,400 level as of this writing, while Ethereum is down 2.95% and currently trading at $4,337. To touch on some others, we have Litecoin down 0.86%, trading at $111.56. XRP is down 1.4%, trading at $2.82. And Solana is down 2.71%, trading at $204.34. For a commodity update, gold futures took a breather today, losing a little less than 0.5% on the day and are trading at $3,597 per troy ounce as of this writing. Silver followed with a loss of 1.1% and is currently trading at $41.27 per troy ounce. WTI crude oil futures lost 0.66% on the day and are currently trading at $63.28 per barrel. Now, for our key events tomorrow, we have non-farm employment change, average hourly earnings month over month, and unemployment rate data releasing at 8:30 a.m. Eastern Time, which could provide some more volatility for us this week and for Friday's session. Now, without further ado, it's time for our quiet market Quiet Markets live trading session with both myself and Coach Tiger. So let's get to the trading, folks. Coach Tiger.
What's going on, Coach Paul?
Nothing much, my friend. I am actually doctoring up my charts a little bit here to start our session. I didn't doctor them up beforehand, so bear with me. But everything's good, man. Trading session was good. Was able to claw myself back from being down about a little over $500 today, and I ended the day with in the green at about $122. So I'll take it. It's been this kind of journey for me lately where I go red to start the day, and then I slowly crawl like just claw the losses back, and end up green with a small green day. So I'll take it though. It's proving my resiliency. I love proving myself to these markets that I can beat them. Go. It is possible.
So basically, you're not a starting pitcher; you're a closing pitcher. Is that fair to say?
Exactly. I love that. I love that analogy. I live for that. I live for the closing. I live for the pressure situations. I think that's why I am a trader, to be quite honest. I love it.
Well, hey, closing pitchers get paid a lot of money just like the starters. So that's all that matters. Yes. Good deal. Yep. How's
everything with you?
Good. Yeah. Looks like we're between you and I on screen. We're broadcasting from outer space. You get the black screen as well. Yeah, we had this last night.
Yeah, I do have the black. Yeah.
We had this last night. We just had to kind of wing it, but the charts should share just fine. I just kind of go back and forth on the YouTube link, make sure it's looking good. So we'll figure that part out eventually. Right. But we are here in the visually for the chat. That's all that matters. So
exactly.
Yeah. Well, I mean, as far as today goes, I'm still in a WTI short. It's kind of going a little on the sideways. Little sideways action. Other than that, I did get into a tiny loss on the Nikkei this morning. So it wasn't the greatest supply zone I was selling it in. It kind of got a little bit of a bounce, but then it looks like it's trying to respect the supply zone just above it. So we'll see if I decide to get into that or not. Probably not, because it did kind of go back to neutral as far as my scoring system goes. Let's see here. Right. Let me do something real quick here. Get my screen good there. Okay. But yeah, both of them were kind of London breakouts. Like I said, the WTI one's working. Well, I don't know. It's kind of going sideways, so not really anything to report on that. I may end up just close it out out of boredom. But
yeah.
But yeah, with let me see here. With the U.S. data that came out today, we had, of course, the weekly employment numbers and unemployment numbers. So that was both a little on the negative side for the dollar, but the PMI data was good. And as a result, it looks to me like the U.S. dollar had a little bit of an increase. So it kind of shook off the employment numbers and focused a little more on the PMI numbers. And
Nice.
as a result, let me just go double check my Dixie real quick. Well, I mean, it's now kind of retraced and went down. So, okay. Well, it had that initial spike after the report release, but yeah, it looks like it might have hit a little bit of an upward trend line, bouncing backwards. But yeah, either way, gold and silver obviously took the opposite effect. They went down, but now they've retraced up. Okay, so there we go. Yeah, they've kind of retraced their losses. The metals have, and it makes total sense to me because that's I'm still getting my strongest scores on gold and silver. So let me go back to my thing here.
By the way, Tiger, real quick, I am long gold right now. I'm long one gold contract on the futures. I got long right before we broke out of this like overnight high of 36.13 half. I got long right before that. Like we just broke above that area and we're actually trailing back now a little bit. Some pretty decent sellers came in at 36.14 and a half there. So about a dollar above where I got long. Some sellers came in, but a bunch of liquidity is kind of posting itself between 36.15 and 36.19. So I'm just going to try and hold a longer gold trade here. See if we can't get a big move up to 36.19 here in the overnight. So back to you.
Nice. No, that's good stuff. That's good stuff.
Yeah.
But yeah, I was just looking at the Dixie on the currency futures and then also the regular Dixie index. So yeah, 7:15 my time anyway. That's when that non-farm employment change number came out. So upon the release of that, again, it was a negative number. So we did get a spike down, and then 15 minutes later, we got the unemployment numbers that came out at 7:30, and it was negative as well. So it kind of brought it down a little bit. Then kind of retraced back. I kind of had a little bit of a trend line. I don't know if you can see my screen or not. Well, but the chat can. So yeah. So for the chat, I kind of had this upward trend line attached to a bunch of these reversal points. So yeah, when that report released, let's see here. Let's make sure I'm in the right spot. Okay, I need to go back down to my 5 minute. So yeah, looking at it on a 5 minute. So here was the release of the first report. We had that big spike down, but it retraced. And then again at 7:30, we had that second report, and we got another spike down, but it went back up each time. On the second time it went up, though, after that. I'm sorry, let me just make sure I got my right times here. Okay, so 9 a.m. Central, that's when the PMI data came out. So that number was good, and we had this spike up from this candle here. And yeah, it bounced into that trend line and just been kind of bouncing off of it. Now it's trying to go back down again. So looks like it, at least for the rest of today's intraday session, kind of shook off the good news and is going down. So as a result, looking at gold, looking at those same time frames, because everything is typically in reverse. 7:15, not a whole lot changed in gold on that first report release, the ADP number, but then 7:30 hit right around here. So yeah, all these wicks you're seeing, that's basically those two negative events for the dollar. And then at 9 a.m. Central, we had that positive PMI number. So that was negative for gold because it was positive for the dollar. But again, it's kind of retracing and shaking it off. So just give you a little bit of an understanding, and this is a 5 minute time frame, of kind of how some of these reports affect everything. I mean, you'll get a lot of wicks like this. They get a little bit of a move up, down. But at the end of the day, as of right now, it looks like, because gold and silver are such a strong bullish fundamental score, it looks like it's kind of shaking all that off, and now it's back to the tops again. So yeah, for gold, just kind of going out to a higher time frame. Yeah, let's see. Today's Oh yeah, so I had Tony on last night. So yeah, I'm pretty much looking for that retracement back to this multi-day bounce that we had. Let me get that out of my way. This blue
Mm-hmm.
rectangle that I had put on since the end of April, where we had a close here, a close here, a close here, a close here. So we had 4 closes. So obviously Friday, when the session closed, we had that first close above that zone. And then obviously this week gold has just been continuing up. So uh, for me to get into this trade, though, I'm preferring that price retraces all of this week's move to get back down to the Friday close because, number one, on a daily time frame, obviously we're looking at the 4 times it closed as a resistance point. I'm looking at it as, resistance becomes support. Well, what better place to get into that trade than the 30-minute demand zone that formed literally right on top of it. So that's the best one I can see right now as far as like a safe entry on a higher time frame. And then let's see here. I did also kind of draw up this little zone here, but I think I'm just going to prefer that we get the retracement. So the break retest, the classic break and retest for gold. So yeah, I think that's my best play right now. I mean, it's pretty high on the curve. It's buying expensive prices to get in up here, even on a smaller time frame, for my personal taste.
It is.
So, yeah. So, I mean, if you were to be ballsy and want to buy on a 5-minute time frame, well, then there is a 5-minute demand zone down here. If we're looking at this little point here, so pretty good move out of that area. But again, it's just overall really high on the curve. Does that sounds like you might be in agreement on that?
Oh yeah, well, the funny thing is I was looking for like kind of just now when I got long, it looked like a lot of buyers were stepping in, and it looked as if like we could take out a bunch of liquidity to the top side, and then so I could ride that up in the next like 5 to 10 minutes. And because the volatility in gold has been so high, these big moves happen in short periods of time. So I was like, all right, this looks like it wants to do a little breakout, maybe like a test of the regular trading session hours, like high, which is roughly 36.18 on the futures here. So I was like, all right, get in at 36.13, look for a play up to 36.18, and then like maybe see a massive rejection. Instead, I got long. It went up about $1 to 36.14 half, and then just got rejected harshly. Right now, I've got a huge, like a very large stop loss because I want to let this play out more. But it just in the last 1, 2, 3, 4, 5, in the last 7 minutes, we've dropped $6 an ounce, or $5 to $6 an ounce. The volatility in this product is nothing to fool around with. That's for sure. So I'm long 2 gold contracts now because I think where we just fell down to would need to relatively be supported. This area of 3608 to like 3607 to 3609 area, I think needs to see some support here. So long 2 contracts, my average is 3611 and a half. If we're going to see some more upside here to maybe match high of day on the regular trading hour session, it would occur now. If not, maybe it's going to just, push further to the downside, just like you're saying, where we got to kind of retrace a little bit below that 3600 area in the futures. I know it's different for you on the XAU charts. The prices are a little bit different, but yeah. So don't blame you. I think you got some good analysis there, to be quite honest. So
yeah, and just for everybody in the stream, that's obviously for me when I talk about that, I'm looking at it on a 5. He's looking at it on like a 1 minute, 2 minute, 5 minute, all that on an auction theory. So it's a little different, but yeah, you can make an argument either way. So it's just cool to see the different styles. But yeah, I'm looking, I for the chat, I obviously look at XAU USD, whereas he's obviously looking at the futures contract. So the prices are fairly similar. But yeah, he's using that auction theory, which is awesome. he's going to be teaching me some of that stuff. I can't wait just to see if there's any merit
Yes.
to it in the coaching world. But yeah,
Yeah.
I mean, I could definitely see a couple little spots to potentially take along, but yeah, just kind of with the way I look at volume, I'm just not as comfortable with it, but yeah, that'll be the benefit to learning a little
Amen.
more on option theory, right?
Hey man, yeah, no, definitely. And even then, with based on the market profile from this previous regular trading hour session, technically, point of control is between like 3605 and 3607 or so on gold. So I'm kind of like with being at the 3610 area right now. I'm technically buying like what you could call like at a premium, where I'm not getting as great of my value, of value as I could or I should be getting, but in a name like this that is really just been such a ripper. It's been a face ripper essentially as of late.
Ripper. All right.
Sometimes you need to like play momentum more than the value. It's just kind of like a judgment call of sorts where you don't get that that clean like value area test, or like the levels aren't necessarily as clean when the momentum is just ripping. Like price is just going to get away from you. You're not going to get into any trade, and that's okay to definitely sit on the hands and or trade in something that where the value is relatively there, like the probabilities are more in your favor if you can find something to trade that just gives you a little bit of a cleaner setup. But in the overnight sessions here, gold is a really good one to trade because it's a relatively active contract. Same with something like the Nasdaq. It's a little bit more, there's a little bit more volume in it, so I'm giving it a go still. See if we can't catch a little bit of a momentum play here. We did find a little bit of support here just in this last like 3 or so minutes, 4 minutes at the 3609 level. We saw some buyers step in, but could be short lived. We'll see. But yeah, I've got my stop relatively low, below the 3607 area, and my average is 3611.5 at the moment. So I'm almost at break even right now. And like I said, I'm going to be playing this further to the long side, probably closer to the 3619 area. I might scale out of one of these contracts closer to like the high of our range of like 3614.5, just to lock in a little bit here if I get if I get the chance. But yeah, long the two minis. So come on, gold.
Yeah,
Go to the upside.
Yeah, it reminds me.
It's fine.
Well, both the futures and the XAU USD kind of reminded me of the Batman signal on the 1 minute time frame. The last half of the Asian session. So that's pretty cool.
Yeah.
Yeah. So for me, I'm just going to probably wait. I mean, the demand zone that did form on a 5 minute, I mean, that happened on yesterday evening's Asian session towards the end. And it wasn't a ton of volume like I like to see. So yeah, that's pretty well what I'm going to do. I'm just going to wait for this pullback. I've kind of already drawn the projection tool for everybody in chat. So it's a deep retracement. It may not even make it down there. I mean, it wouldn't surprise me if it didn't, because again, it's if I just pull up my top setups page real quick, copy and paste it so that all can see. Get that over here real quick. Yeah. So here we go. Let me zoom in on it. So yeah, I think last night with Tony, I think gold was sitting at about an 11. So after the PMI data came in good for the dollar, that's naturally on the negative side for metals. So it actually dropped about 2 points. So still is the most bullish item I have. It's still giving me a very bullish signal. Now, very bullish is basically a 9 or higher. So 5 to 8 are bullish, and then 9 or higher is very bullish. So it just gets its extra word for what that's
Yeah,
worth.
yeah.
But yeah, there you go. SPMI. So this report yesterday when we were looking at it was a blue color because the previous U.S. PMI data was a miss, I should say, missed expectations. So since it beat expectations, that was obviously good for the dollar, and then negative for gold. So that's why we dropped those 2 points from last night. So, but again, that's why it's just important to not look at any one single report by itself. It's just good to look at it in context of everything else that's been released recently, and that's why it's not really surprising that we did obviously have that initial drop, but then it's turning around and kind of going back up to the daily highs again. So it's just kind of shaking it off. So yeah, I thought that would be a cool visual to share with everybody. But yeah, I'm gonna pretty much skip it for now. Silver is a 6. Same thing. I mean, both of these got pretty expensive pretty quick. So it's really kind of a similar thing. I'm just looking for a pullback. This green projection line I drew here, all the way down to this daily demand with this 4-hour demand inside. So it's giving me that confluence I love to see. And the zones were formed when they were in oversold territories. So that also kind of gets an extra little attaboy for the creation of that zone when they're formed in the oversold territory. And then obviously on the opposite side is if I'm trying to sell and supply, well, it's nice to see that the supply zone was formed in overbought territories. So it's just kind of pulling out the extremes, kind of filtering out some of these other supply and demand zones that form within the RSI, between the 70 and the 30 range. And it's no real coincidence that a lot of those that are formed in the middle are some of those that are formed in the top chop zones, the retail chop zones, right? So me personally, I'm trying to find the institutional supply and demand zones. Those are just so much stronger, and they're typically higher and lower on the curve depending on if it's a supply or demand zone. So yeah, same thing with silver. I mean, I'm asking quite a bit of it. I'm asking it to drop about 7%. Yeah, 7% from the peak high. So again, will I get what I wish for? Probably not, because the market doesn't care what Tiger wants. We need gold to drop a little over 3.5%. But as long as all the currency pairs are more middle of the road or neutral and not giving me a strong bullish or bearish signal, where do you think the big banks and institutions are probably focused more so? Probably metals. I mean, the dollar.
Yeah.
My gosh, the dollar, man. I'm gonna show you guys this chart too. So after everything shook out today, let's take a look at the economic heat map for the U.S. dollar. Yeah, this is a bit gnarly. Hold on one second. Come on. There we go. Okay. So I'm going to copy this. We're going to take a look at the heat map. Economic heat maps. Let's just go back all the way up to the Dixie real quick. Find me a nice spot over here to put it. So yeah, here is the heat map. So now that we had the unemployment numbers, okay, the unemployment numbers come in bearish. I mean, it dropped even more points. So now we're only exceeding 36% of expectations. So this number was at a 51 or 52% yesterday. So, so we don't look at any one report on its own, but you can get one or two reports to dramatically change the outlook as far as overperformance or underperformance of a currency pair. So those two reports basically dropped at about 15%. And now we're getting to the point where we want to start selling the dollar if you're just strictly looking at it from a fundamental point of view. So Would I be wanting to go out and buy the dollar right now? Hell no.
Well, it's so funny because I keep seeing, it's like one of those situations kind of where I do like I see a lot of sentiment around the dollar being bad, generally speaking, but
Yeah.
against a lot of the major currencies, it seems to be relatively doing well at the moment. But people are like
Mm-hmm.
waiting; they're like on their tippy toes, waiting for the dollar to break essentially, and the euro to climb to like 1.25, or see GBP climb a little bit, or what have you. And like I do see a lot of news stuff like that lately. For
Yeah.
these pairs, like just everybody is really expecting the dollar to drop eventually. I mean, it makes sense also with the rate cuts and everything that are
Right.
supposedly on the way and whatnot. So I get that 100%. But real quick, actually, it looks like gold might have a little bit of a it might be looking to break upwards here. Do we
Yeah.
possibly want to show my screen
Yeah.
for
Yeah.
the
Yeah.
to see if
Yeah.
it
Back in. Let's
makes the move?
move on
Can
over to
be
Mr. P, Mr. Paul.
it can
Got
be
football
quite
going on
volatile. Whether it goes
as we
my way
speak.
or not, I would love for the chat to at least see it if
Yeah, for sure.
they want to see the charts moving. So
For sure. Yeah. Well, let's see if I'll let you know when it gets over there on the YouTube.
yeah,
There you go. You're showing now.
here we are. All right, I got the 5-minute chart up here. Again, still along the two contracts on the gold. Really, it's I endured essentially this whole here I can quick let's do a where is it here, little path there. I endured essentially this whole move here, and then I'm now back up to here. I'm looking for a relatively quick move to the upside, if I'm being honest. I would expect the aggression to really start to come in after having like been in this channel for so long and having like tried to make that push once before about 15 or 20 minutes ago. I feel like if buyers are going to do it, it's going to be relatively soon. Whether or not that buying pressure lasts 5 minutes and then, like I said, just sells off very harshly, or if it just fizzles out when we get closer to the top here and of the range, and then we see another consolidation. I don't know. Whatever it is, I'm expecting a relatively harsh move soon.
Yeah.
This candle, now we've had essentially 2 5-minute periods with like a doji structure where a lot of buyers are trying. There's like relatively large aggressive buying delta, but it's not getting anywhere, so that's a little bit concerning. So it's either we're churning through like sellers that have icebergs at this 3612 area, and then we're just going to completely churn through them, and then we're going to pop, or we are going to lose that steam. The iceberg sellers are going to win, and then we just drop. So that's kind of what my thought is. And it looks like we churned through it, and we're popping to the upside a little bit here. So that's good. This is a good sign. This might, the unfortunate part about this kind of trade is you really can't be trailing with the volatility of the name and everything. You can't be trailing tightly to really any degree unless it starts moving like exponentially upwards. I've got to keep my stop low enough to give it room to breathe. So some large risk, but for a very large reward on this one.
Mm-hmm.
And it's quiet markets, man. It's
Yep.
it's a different trading jungle out here in the quiet markets than it is in the regular. So
No,
so
that's true. So yeah, we do have a little bit of a poll question. Bitcoin and alts in the red again. Is this blank? Just a breather before liftoff? Bear trend alive and well? Boring chop zone? Or whales shaking the tree? I like that one. That's funny.
Whales.
Yeah. What do you what's your outlook
I
on that?
think,
You have an opinion on that, Paul?
I don't have a good opinion. I probably don't have a good opinion. Let's put it that way. I have an
Yeah.
opinion, but it doesn't mean it's a good one.
Right.
I have seen a lot of chatter about like the whales. A whale in Bitcoin, like we saw like a week ago or so. Ooh, look at gold. Um, Bitcoin whale just dumped a ton of Bitcoin, and then just earlier, like today, we saw like some whales were exiting XRP positions. So XRP is like on the downwards trend. A lot of most coins are on a downward trend at this point, but for me, it
Right.
feels like a little bit more of a bearish, like, we're starting a little bit more like we're going to be getting into a bearish trend. But, if I hope not. But, and if it does,
Yeah.
like, then great. I get a chance to buy some more of my position at a lower price.
There you
If
go.
it doesn't, then my current position is doing all right then. So, doesn't matter for me personally, but it
Right.
feels like people want to kind of exit positions, get a little bit more cash on hand to maybe or at least some bigger players want more cash on hand to maybe put it to use somewhere else. Maybe they're getting a little scared and wanting to put it into something like gold, but maybe they think that that's more of a flight to safety and they can protect their cash there, or maybe they want to buy the 10-year note before rates start getting cut and the yields start going down a little bit. So there's just different things you can do with your money right now in this market, and
Yeah.
it wouldn't surprise me either way with what occurs. It looks like gold here is, it's behaving very nicely. It's starting to pop up here, but can we continue? Can we continue? Okay, so we got 2 minutes left on this 5-minute candle here. It would be really nice to see a close above 36.13 on this kind of 5-minute candle, and then open up the next candle maybe right at that close, and then make our big push to make a breakout above the 36.15 area. That's definitely what we're looking for here. It would not be great to see a consolidation back towards the 36.10 area after making this lower high, like wick below the wick of, let's see, what was it? It was 9:05 p.m. Eastern time. We just made like a wick high on this candle here of 36.14, about $0.50 below it. So I would like to, at least at the minimum, make it, see it make a quick new high before consolidating if it wanted to consolidate. But, at the same time, beggars can't be choosers. We're in a little bit of a longer term gold position here. Maybe it might take an hour to play out. It might take, the entire session to play out. Who knows? But we did see a lot of aggressive buying delta at this 36.12 area, which we're coming back to right now. And then some more aggressive buying delta come in all the way through 36.13 half. So the last thing we want to see is sellers take over below 36.12 and then make the longs puke out of their position. And then we drop below 36.09. That would be not the greatest scenario. But it's going to depend on how aggressive I see, or like what the volume looks like on this sell downwards here. Is the volume going to really start picking up, or is it going to be relatively scarce, or like the seller is going to get trapped essentially, and then we're just going to see a ton of buyers come in aggressively and thrust it back upwards. So I'll continue to keep an eye. Maybe after all is said and done, I can share a screenshot of the order flow that I have, and we can kind of go through it on a more like tactical basis and try and point some things out on the aggressive buying and selling deltas that I have here on my third party data. So
Nice.
yeah, we'll just keep the chart up for the time being. Let it play out, see what the position does. You have any specific pairs that you're looking for tonight, or still, like you said, silver's a long ways away. I know gold you're going to hold off on for a little while. Anything else? Maybe NASDAQ or
yeah. So no indices at the moment. Mainly Aussie pairs right now. If you're okay with it, I can flip back over to my chart and show a couple things.
Yeah, sure.
On that.
Sure.
Yeah, go ahead and flip back on over. Yeah, the Australia dollar has had some really good stuff come out within the last 7 days. So just taking a look here at the Aussie dollar. So this is Australia's economic heat map. So looking at this thing, I mean, you've had some really good GDP numbers, and both sectors of the PMI data came out really good, the manufacturing and the services. So that's got the AU impact. So as far as overperformance, sitting at a 71%. So that's actually one of the higher graded individual currencies at the moment. And it's no surprise that when we look at our top setups, well, it's pretty much that's it as far as my bullish items. I got Aussie CAD, Aussie Swiss, Aussie New Zealand, and Aussie Yen. So it's currently, of course, these things change, right? It seems like every few days as far as currencies go. But yeah, as of right now, Aussie dollar is looking really strong. So if I can sell something weak against that, then absolutely, that's probably going to be where I'm going. So just taking a look, Aussie CAD, it looks like it's the strongest. So let's take a look at Aussie CAD.
Nice.
Aussie CAD. So this one has been in a multi-week, multi-month chop zone overall when you're looking at it just on a daily time frame. So we just need to kind of go down and see if we can buy towards the bottoms of some of these pivot low points here. Now, the first zone that I immediately identified was, I believe, a 30. Yeah, so this is kind of a 30-minute demand down here. Looks a little better on a 15-minute. But yeah, on a 15-minute time frame, this is probably the closest thing I have at the moment. And I just need to update the looks of my little projection tool here. But if I'm looking at this on a 15-minute time frame, as far as the entry point, well, I need to look at a 1 hour. So 4 times up for my trend. So on my trend, okay, 1 hour time frame, got an uptrend, higher highs, higher lows. So that meets expectations there. Now, am I buying high on the curve or low on the curve? Yeah, I mean, that's pretty much the bottom of the curve. If I'm looking at where that 15-minute demand was. So, you could also make an argument if you're looking at the broader case, you could make the case that maybe this is our curve. So that would put that in the middle or towards the bottom of the middle. So very ever so slightly diddling in the middle, but it is further down, on the bottom part of the middle. So I think I'm just going to choose to use the bottom itself as the curve, which clearly, of course, I would be on the bottom of the curve. Let me see here. So, yeah, I think I'm just going to leave the curve analysis part out because, like I said, if I use this swing low, swing high, well, it is in the middle, but it's at least on the bottom part of the middle. So that's more a beginner thing, by the way, right? I mean, at this point, I kind of focus a little more on the trend and obviously the design of the demand zone itself. So I'm pretty happy with the construction of it. If I go back to the 15-minute time frame, yeah. So obviously we had a pretty good volume spike during the creation of it. So that tells me perhaps there's some institutional interest in that, right? Because of all the volume. It was also formed at the bottom of in oversold territory. So that helps filter out some of these middle ones. So that's meeting expectations. What else is helping this? So we did break through that zone pretty strong. I mean, that's a strong incline. kind of broke through these little highs here. And then it just kept going. So, yeah, everything is screaming that this is a strong demand zone. And again, it's in the context of an uptrend. So that's meeting expectations. So, yeah, if I had to knock it at all, it would just be, depending on where you wanted to look at the curve analysis. Because obviously this low point there, it's in the middle, but it's at least at the bottom of the middle. So I'm okay with that.
Yeah.
So that's
Ooh,
really.
Gold's making a move. It's trying.
Is it?
It's trying.
Right.
Do you want to switch real quick, see if it does it?
Yeah, back in. Let's go ahead and flip back over to Coach Powell.
Yeah. Let's see if we can't. Come on, let's see if we can't see the breakout here. Come on.
Oh,
do it.
There you are.
Break it. Break it. 36.15 is what we need to eat through. There's 84 contracts up at 36.15. So some stronger buyers just came in. 36.15 right here, blue line. We need to see that level just get smashed, and then we have some relative runway up to that 36.19 level. So let's see that there's some aggressive sellers that just came in here, but they are not pushing down as much as I feel like they should be. So we could see, it could happen now. If it's not going to happen, I have a relatively good feeling about this. Part of me wants to move my stop to break even right now, but I think I need to just continue to hold this.
Just a correction.
Oh, okay.
You do the micro or the mini? You do the micro or the mini?
Oh, I'm doing the mini right now. So I've got some big. It depends. So right now I'm on the mini, but depending on how I did earlier in the day and whatnot, and how much money I'm essentially what my risk appetite is based on the volatility, I'll possibly position downsize to the micros or not. But yeah, dang it, man, we just literally. Unfortunately, I think I'm going to have to get out of this position.
Some on a beach.
I think I'm just going to get out of it for now. That is unfortunate, man. That looked really good.
Yeah, it did look good there for a minute.
No way are we. If Jesus, I got to get back in. Excuse my French, but the order flow is really trying to trip me up right now. Let's just put it that way. The deltas are all over the place. I'm okay with. I'm back into the 2 contracts, but I've got a tighter stop now, unfortunately, because with that aggression that just occurred, where the buyers essentially got just smashed downwards, and then we just did a quick little pop there. It's like, okay, I'll give it one more chance. If it pops, fine. If not, I'll get stopped out here. I don't mind. But that's unfortunate, man. I feel like if it was going to, that was the time. I might get surprised here, but son of a gun, that looked so good. Buyers are just a little too weak at the top there. There was definitely an iceberg of some sort, I think, at the 36.14 and 36.14.3 tick area. Somewhere around there, I think there was some icebergs sitting that kind of spooked the buyers out. So
that's the way it goes. First your money, then
exactly.
your clothes. Daddy used to say that all the time. Typical hillbilly.
We just saw some this past minute here, very large negative selling delta here, but we did not drop yet. So there is slight hope for the buyers here. big tug of war, though. I guess you could consider, what would you, I mean, in terms of a pattern, where
Mm-hmm.
you've got this 5 minute, this kind of 5 minute pattern here where we make a
Yeah.
relative like hole of sorts. Would this be considered maybe an ascending triangle, possibly like a flag ascending triangle-ish kind of
Yeah, that's what I
situation?
was. Yeah, that's
Yeah.
exactly what I was just thinking. Pennant, flag, triangle. I mean, all kinds of different names. I don't know the exact correct term or difference between a pennant, a flag, a triangle because I don't really use them that much. But just by going what everybody else says, yeah, it looks to me like a ascending triangle.
Yeah. Yeah, it's essentially, yeah, when I'm looking, yeah, it's like, when you have an uptrend that
Ascending
starts and
flag. Yeah.
then you kind of, yeah, exactly. You have an ascending kind of
Mm-hmm.
like compression zone that occurs to the upside. It usually spells for like a breakout,
Mm-hmm.
but that doesn't mean that it's going to.
Well, I
It's a
guess that
more of
wouldn't be
a
a triangle,
probability
right?
thing.
Because yeah, I guess it wouldn't be a triangle because those two high points to the right should be going down, right? Relative to that first one. Wouldn't that be a triangle? I don't know. See, this is
Yeah,
what
so
I'm saying. I don't
usually,
I don't really get into that type of nitty gritty of designs, but
no, you're good,
flag, I
man.
guess.
No,
Yeah.
but usually what happens is like you have like an ascending triangle would have like this kind of feature to it, where you have an
Mm-hmm.
uptrend, higher lows on the candles here,
Yeah.
and then generally speaking more of like a flat top, and then obviously this like kind of like uptrend of sorts. That's well, this is on a smaller time frame, so it's a little bit more emphasized, I guess you could say. But yeah, like
Yeah.
I don't know. Generally speaking, like I guess if you wanted to play this pattern, you could get long like right now, with the expectation of a breakout soon in the next like 30 minutes or so if it keeps coiling here.
Yeah, that's
But
true.
um,
Or even if you're a little more conservative, yeah, wait for a breakout above and retest.
yeah, and
Yeah.
that's the thing though, man. With a volatile name like with a volatile product like gold at the moment, uh,
Mhm.
you know, waiting for the retest at times is like it's just a
Yeah.
bit difficult because the chances are it's just going to run away from you. It's not even going to give you the
Exactly.
chance
Yeah.
for a retest. So, you know,
Yeah. The least
it's
likely, probably the
yeah,
safest, but the least likely to actually get you into the trade. Yeah, I see exactly what you're saying.
right. Right,
Yep.
exactly. So, large chance of you missing the move, but if you do get into the trade, there is obviously the risk that it entails. You have to be able to sit in it longer, or what have you. But I am looking to maybe get long again. I'm just kind of waiting to see what happens in this next like minute. I want to
Yeah.
see if we can't break down right here. If we don't break down, I might um, just get long. Uh,
Yep. Yeah, I'd really like to get in some gold myself, but just need a couple things to work out.
yeah,
But yeah, as far as that poll question, I was going to show here in a minute when we flip back over to my chart. I'll show kind of a cool way for people to gauge whether or not we're risk on or risk off. You know,
yeah,
as far as deciding, do I buy gold? Do I not buy gold? Do I buy Bitcoin? Or just to kind of go back to those altcoins and such. Just kind of a cool little
hmm
gauge that people can figure out.
yeah.
So
Let's switch to you, and I'll update on gold if necessary. We can switch back
oh,
to
okay.
you, and we'll yeah. So it looks like gold is starting to fail possibly. So I'll update if
Yeah, looks
anything
like it.
crazy happens or if I get back into a position.
Yeah, sounds good. Yeah. Yeah. So, for anybody that has trading view, you should be able to compare one asset with another onto one single chart, meaning, if you're wanting to find out, just a general understanding of Are the altcoins, is Bitcoin, Ethereum, all that, are they poised to go up? Are they poised to go down? A good technical way to figure out at least the technical look of that is by using the Bitcoin to gold ratio. So what you can simply do on your chart is just type in BTC USD and then / and then XAU USD for gold, just like that. And then just hit enter. So what this does is basically combines them. So if I go out to my daily chart, okay, if we just take a look, now Bitcoin is the base, asset. And then obviously gold is the quote asset, right? So if we just take a look back here, from this low point to this high point, Bitcoin was obviously stronger than gold. So that means risk on.
Mm-hmm.
Right? And then from that point down to here, Bitcoin was weaker. So we're risk off. Okay. And then from this point to this high point, Bitcoin is stronger. So same thing, risk on. And then currently, well, it kind of depends on how you look at this, because obviously risk on from, basically Liberation Day, right? Liberation Day tariffs. We've been risk on ever since. But now, if you look at it in the context of, mid-August, we're back to kind of risk off. So that's just kind of one way to see, if it's risk on, I can obviously jump into stocks, jump into some of these riskier assets, right? Their words, not mine, but things like Bitcoin, altcoins, that sort of thing. And then, when you see it go in the opposite direction, going down, maybe you might want to think twice about those longer term positioning type trades. Now, if you're doing intraday scalping or, smaller time frame, it's not as big of a deal, because strong uptrends are still going to ebb and flow the other way, right? And the same is true if it's a strong down. It's still going to ebb and flow, in the positive side. So it's not as big a deal, I don't think, anyway, when you're doing scalping, when you're doing smaller 5-minute entries, 1 minute, 5 minute, 15-minute entries. 15 might be cutting it close, but 5 minutes for sure. So hopefully that helps, but that's pretty well how I answered that question, that poll question. I look at it as more bearish, because I'm looking at it, for me personally, just in the context of mid-August. So the last 2.5 weeks. But again, if you're looking at it since Liberation Day, right, when those tariffs were announced by President Trump, well, maybe this is just a breather, right? A little breather before the next up move, because we had that strong push, but then we had a little breather back here in June, and then that other strong push. Could this retracement leg be the similar thing to this leg here before getting another big push up? Oh, we don't know that. Nobody knows that. But again, it's just all in how you look at it. If you're a higher time frame, longer term position trader, I'd be paying attention to Liberation Day to present. If you're just a short term swing trader or 5-minute entry, 30-minute entry, you might be more interested in that more recent leg down, or the correction leg. So that's kind of how I answer that question, and hopefully that helps you guys out. Just in general, just determining, are we in a risk on or a risk off atmosphere? So that's that. But that's called the Bitcoin to gold ratio. And you can do that with anything, by the way. And I don't know if you have to have a membership or not, Paul. I have no idea. Like, if you just use the free account, I'm not honestly sure. So, but you can do that with anything. So let's just, for example, we can type in EUR USD and then / USD JPY. So there you go. So the euro dollar is the base asset, and then the dollar yen is the quote asset, or the second part. So, you can kind of do that when comparing even currencies, or probably even stocks. If we're looking at stocks, for those of you that also trade stocks, let's try that out. Tesla, TSLA/Apple, AAPL. Well, there you go. You can do the same thing with stocks. So in other words, is one stock performing better than the other, or is it performing more, more poorly than the other? So I don't know. I just think that's a really cool way to look and see risk on, risk off, and obviously which asset's performing better than the other asset. Outside of looking at two charts or even putting that little, obviously you can hit your plus and type in another asset. Like there's SPX. If we add in NDX, then we can obviously pull up a line like that, which is the popular way of doing it, right? Whenever people do that to look for confluences and such, or convergences and divergences. So that's obviously the more popular route. But yeah, if you just want to turn it into one simple, easy to read chart, I just think that's the coolest way to do it personally.
I do like that. I like that comparison tool for sure. Like I was literally just thinking about that earlier with gold versus NASDAQ. I was like, man, I want to see like how they're moving against each other. And I unfortunately didn't have the second to figure it out I know it's possible on Project X too here, but I haven't played around with it yet, so I got to do that. But I am long the NQ. FYI,
NQ?
Just letting you guys know, I'm long the NQ. Yeah, 4 contracts,
NQ.
4 on the NQ.
NQ. Well, you got getting a really nice tail underneath.
Yeah. I saw at essentially 9:47 p.m. a big aggressive seller at the bottom of that wick on the 1-minute chart, and then we just immediately shot up. So my thought is I just jumped in on the long here once I saw it, and I've got my stop relatively close to where that area is. So where the aggressive seller. So giving it some room. Basically, just looking for it to continue what it's been doing this whole night. I would like to just see it continue to stair step higher. I've got my target profit at 23,747, which is only about 13 points higher here. In the overnight in total, in the NASDAQ, we've moved about, excluding the first hour after cash close. So basically, starting at 5 or 6 p.m. Eastern, we've moved up about 40 points. So I'm just looking for another 7 points above the current high of the overnight here as a take profit area, which when you look at the market profile, let me just pull that up real quick on the NQ. When you pull up the market profile and I look at the previous regular trading hour session that is kind of in this range, this area that we're in, this 23,740 area, that goes back to August 28th when we had a big day trading in this zone. And the point of control on the time, price, opportunity, and volume profile was literally between like the midpoint of because the 2 point of controls were different based on time and volume, but the midpoint of the 2 point of controls was roughly this like 23,750 area. So it's kind of what I'm targeting, somewhere of relative comfort that NASDAQ longs would possibly seek to be at. So yeah, we'll see where we can go here.
Nice. I'm thinking hardcore about hopping into a Nikkei trade. So and then I'll go over the ones. So earlier today, I got into this. I can't remember. Are we on your chart or my chart? I can't see.
Your chart.
Oh,
yeah,
we are
your chart. No, actually,
Oh,
no,
looks
we're
like,
on my chart. Sorry, apologies. We'll switch to
oh,
your
good.
chart. Yeah,
Oh,
let's
no
switch.
worries. Yeah, without having it in front of me, staring into outer space. Couldn't remember which one was which. Yeah, so on this Nikkei, so this was the one I took a small loss on this morning. So I was looking at this zone here, went in and then rejected it a little bit. I mean, quite decently at first, but then it just kept going. So I did get stopped out for a small loss here, but now we have ran into a situation. If I just go back to my other chart briefly here, I kind of drew a line connecting some of these upper wicks a little bit back in time, kind of some resistance points, and we've pierced through it and just slammed the door shut on a 4-hour time frame or even a 1 hour. So that's about as strong of a rejection as you get. So just kind of looking at it on a little bit of a smaller time frame, and the argument could be made that this kind of turned into a little supply after it came back under. Just a little bit of supply there. It's not the strongest, not the sexiest, but the point is that higher time frame resistance point just getting such a strong rejection. Again, when we're looking at it on a 1 hour time frame. So because this thing's high up in the curve, okay, and that's my little monster friend that I drew back in mid-August. So his arm's getting longer and longer and wavier, as you can tell. So this is a perfect example of high on the curve, but with a downtrend. So we just peeked through, very strong rejection again on that 1 hour time frame, 4 hour time frame. So I think what I'm going to do on this is just take a sell position and just put me a stop loss above the top of that spike, right? So let's see here. Yeah, we're going to do that. I got nothing. No reason not to. So I'm going to go over here. I got a lot of drawings on here. Let me clean this up a little bit. Actually, just start all over. Okay, so yeah, we're going to do this. We are going to do a sell. And this is quite a wide range. And it's fitting my curve analysis perfect. It's fitting the downtrend analysis perfect. So we're going to raise the wager on this a little bit. So let's put our stop loss 43,324. 24. All right, where can I find a take profit? Looks like we got a pretty good one right there as far as a demand zone further down. I want to keep an eye on that area there as a potential demand, potential bounce point. Had a little bit of a volume spike on that leg out candle, that beautiful green leg out candle. So definitely would want to be buying to cover before we get to that point. Let's take a look a little bit. Yeah, that's probably going to be it. Yeah, none of this looks serious enough, like a threat, to just be causing it to God, I always forget where my tools are at. There we go. Well, where is my analysis tool? Well, anyway. So anyway, we're going to take a look. Really? Where's my projection tool? Oh, duh, here it is. Yeah. So we're just going to take a simple short. I'm not too worried about this area here, but that one definitely tells me I need to buy to cover before. So we're going to take a short sell here. So I'm going to go ahead and take profit 42,200. So this will be a longer term trade. Obviously, tomorrow's Friday close may have me out quicker. But Nikkei is giving me a bearish score on my giving me a bearish score on my setup. Oh my gosh, I totally forgot to do. I totally forgot to hit limit.
Sell.
Or market.
You're not used to hitting market, man. That's why you're not used to hitting that market order button.
All right, sell.
All
right, should be good now. There we go. And we'll just make sure to buy to cover before the before the demand zone. So there we go. 0.3 lots. I'll get that added to the chat. I'm going to get my money back since it took it from me this morning on that on that lower quality supply zone. I ended up shortening.
Let's get it. Yeah, definitely. Let's get that sucker back. Let's get it back. Come on.
It's funny because Michael's been talking for the last 2 weeks about his euro pound trade that he lost 1% on. He put a 1% on that, lost it, and he's been talking about it for the last 2 weeks. Like that pair is going to give me my damn money back. That's what he keeps saying. But he just hasn't had a good.
I had something similar with me with the Dow, man, where the Dow took a bunch of money from me. I believe it was last week. It was early last week or maybe the week before that. And then I was just like, you know what? I'm done with the Dow. I'm done with the Dow for now. I'll jump into some small trades here and there, but genuinely the Dow can kick rocks. Because it is just really getting on my nerves. So I did take like a small Dow trade, a small Dow winner today. It was very small. I think I made like 60 or $70 on it. So comparatively to my others, it was small. But, it's like I'm okay with doing that and, getting little wins against the Dow. But I'm done going for the larger wins with the Dow because, man, has it aggravated the heck out of me lately. So
yeah. So that's that supply zone that I was looking at on the other chart. So just for context. So yeah, strong rejection out of it. Got our short order. Take stop loss above. Take profit to buy to cover before this demand. So that one's good to go. And then also I do still have this WTI trade. So on this trade this morning, let me see. I had looked at this in the context of the London Open. So this was London's low after the first 30 minutes, London's high. So what I did on this one was waited for this breakout right here. And then I actually waited for the 5-minute candle after. And we got short there. And it kind of danced around all kinds of ugly sideways all day long. And we're still right in this area. So I'll see how it reacts with the London Open in the morning. If it gives me any flack, I'm probably just going to get out of it. But if we get a little bit of a burst from that, then I might stay in it for the London session. So yeah, that's that one. A whole $1 profit. Let's see. There was something else I was wanting to show. What was it? Oh, it was just going back to the Aussie pairs. That's right. Yeah. So that's the only bullish items I have right now is these Aussie pairs. So we've already looked at Aussie CAD, Aussie Swiss, I believe. Let's go back to Aussie CAD. Make sure I finished that thought there. Okay, yeah. So we're looking, so 30 minutes, 15 minutes. Okay, so yeah, I pretty well finished that. So that's my play on that. That's my favorite currency pair right now. And then just going to look at Aussie Swiss was also, so this is a 7. This is giving me a bullish score of 7. Aussie Swiss is just a step below at a 6, and it's going to be close. Aussie CAD and Aussie Swiss, they're not usually too much of a difference. If you look at them, they're on a 1-hour time frame. I mean, Aussie Swiss is a little more compact, so that in itself makes it kind of a turnoff because I'd have to go on a really tiny time frame to find something, and when you go down there, yes, it's just Wick City. So that's part of the reason I don't really like to trade the Aussie Swiss. It's just Wick City. So I don't think I really want to. So I'm going to basically skip that because I'm more focused on that Aussie CAD anyway. Aussie New Zealand, Aussie Jap. Let's go look at Aussie Yen. So this is another bullish 5. Yeah, and this one's very similar. I had looked at this demand zone here, but as you can see, I put a red stay the hell away sign. And I did that because it formed in the Asian session with no volume. So I just had no interest in that. And
Okay.
And when it did leave the zone, it bounced right straight into this higher time frame supply zone. So, unfilled orders, even though it's even though even though it's an uptrend, and even though the fundamentals are pointing to the bullish side, there could still be unfilled orders up there for people that missed this move when it was going short. So they could potentially, and they are clearly, because they're clearly turning it around. But yeah, all of those things just are going against me wanting to use that. It all started with the volume. That's all I had to see was the volume.
Right.
Which, and that's not really any fault of its own. That was created at the very beginning of the Asian session. So you don't get a whole lot of, sometimes you just don't get a whole lot of action.
Mm-hmm.
Yeah. I mean, even going down to the 5-minute time frame for that area, there's just nothing. So yeah, no real play on Aussie yen right now.
No Aussie yen play.
But yeah, Nikkei -5, so I'm in that one. And then now the oil play that I'm in, the WTI, it's technically giving me a neutral score. So, I'm kind of breaking my rule on that. But when I look at WTI, part of the reason I got in there.
By the way,
yeah,
you saw the Zoom chat real quick.
Oh, let me go look. Oops.
Look at it real quick.
Did I put that in the wrong spot? What a doof.
Hey, it doesn't matter. I feel like it's not a huge deal, but
that's funny. Sorry, back end. I put it in the wrong spot. But anyway, so with U.S. oil, or what WTI, it's saying pretty much the same thing. It had bounced into this 4-hour supply zone the other day. And I was so annoyed because I had been all throughout this price action. Each week I'd been resetting my alert another week out, so that when price hits this zone, I look to take a short on it because I had a bearish signal throughout this downward price action. Well, it started to balance out and go to neutral. And as you can see, it followed it just kind of rebounded. Well, I was still interested in selling it just because we had such a strong volume there. And not to mention the fact that the 50% fib retracement literally was right in the bottom part of it. So what happened? Well, I forgot to do my alert. And the 1 week I forgot my alert, as you can see, it just wicked in and just bottom fell out of it. So I'm basically seeing that and the fact it did break this trend line with some force. Went back up and then rejected. So I was looking at this in a pretty decent downtrend, just mainly on a technical level. So technical analysis solely. And so that's why when we opened up the London session, that's why I felt pretty good about just hopping in on a breakout.
Yeah.
So yeah, I mean, kind of broke that line. It obviously broke the London low. And yeah, I'm basically at the mercy of price action at this point. So I still feel pretty good about it. But if it does end up failing, probably why? Because the fundamentals did kind of go back to neutral. So the bearish narrative is really no more. And plus, we all know oil is really affected. It seems like mostly on OPEC and the tweets and this and that war, right? And so it's just very unpredictable. Coach Michael always complains about it, and I call it. I pick on him and say that this is his naughty child, or naughty stepchild.
Oh man,
talking about oil.
The naughty, yeah, exactly. Yeah, no, we're not talking about.
So
I have not traded oil recently. I must say I haven't traded oil. Well, I mean, I guess I should say I haven't traded oil in the last this week. I did trade it once last week. I had a small gain on one trade last week, but you know, I don't seem to find too many good entries in oil for some reason. It's kind of far, few and far in between for some
Join the
reason.
club.
Yeah, yeah,
Yeah,
yeah,
he.
yeah,
Well, and I've only been really following oil for probably 6 or 8 months. Like it's nothing that's been on my radar
yeah.
my whole trading career. It's fairly new. In
Right.
fact, this WTI trade I think is the first time I've actually traded oil, just because it was finally, I finally figured out I finally found a little bit of a trade plan that I actually like. It's not my traditional plan. I mean, it's not like I sold it.
Mm.
I mean, it did. I mean, it did hit the supply zone on the 4-hour time frame. So I was just again looking for it in the context of a continuation move on a smaller time frame. So that's really what I did. But the reason that I wanted to sell is because it did ultimately hit that supply.
Yeah.
And then after it hits supply, after I feel comfortable that it breaks, a couple low points here, well, then that kind of opens up the bag of tricks to smaller time frame supply sells or breakouts or London session open, breakout sells. So, but that all
Mhm.
started only because it had hit the higher time frame supply. So that's
Mm.
basically my compass, if that makes sense. Had it not hit that,
Yeah,
I
yeah.
probably wouldn't have it. Yeah, had it not hit that, I wouldn't have had any interest in doing that. But that made me feel a little more comfortable. So we'll see. I could be right, I could be wrong, but you don't know unless you jump in, right?
Yeah, exactly. Oh, yeah, that's true. At least sometimes just jumping in with a little bit of risk into something
Mm-hmm.
helps you pay a lot more attention. Maybe you'll see
Yeah.
things that you wouldn't have if you didn't have the risk on. To be quite honest, and you also get to just test your brain basically on how you emotionally react to a product that you're not necessarily extremely familiar with too. So
Yeah, that is a
yeah,
great. No, I'm glad you mentioned that, Paul. And that's for anybody watching. I mean, if you're like right on the edge of placing a trade, maybe your system is telling you to trade or place that trade, but maybe something in your gut tells you not to, right? Or vice versa. Maybe your gut's telling you to place that order, but your system isn't telling you to place that trade. Hell, get in the
yeah,
trade anyway, but just go on whatever the lowest amount your broker allows you to trade with, right? Assuming you have a decent size account or a challenge account or whatever the case is. Well, I wouldn't recommend on
hmm
challenge accounts, but or just whatever. What I'm saying is, if you feel like there's a chance, jump into that trade. Just put in a .01 lot or a .1 lot or
yeah,
whatever the smallest lot is, right? Just to kind of tiptoe in. That's what I'm doing on a lot of these smaller time frame trades. Okay, my edge is on a higher
yeah,
time frame. My edge is 4-hour supply and demand zone. That's where my edge is. That's where I'm fairly consistent. But with going down to these 5-minute and 15-minute entries, yeah, I'm cutting my risk a ton because they're scout trades,
hmm
not scalp. I'm talking scout, SCOUT, meaning I'm testing the waters. Exactly what Paul said, right? But
yeah,
if I just sit and watch it without being engaged, well, it's easy just to forget about it. But if I put just a
yep,
tiny bit of money on it, then it
hmm
forces it forces our brain to pay attention to it and learn from it. So yeah, I
yep.
think you hit that on the head. So I just thought I would elaborate on that.
No, I'm glad. I'm because I think it's true, man. I mean, I think it is it is said like with some sort of frequency in our trading world to sometimes the putting the risk on just it's different. You like when you have something to lose, you're naturally just like a natural instinct is to learn at the minimum to
Mm-hmm.
learn. Like you are going to pay attention, whether you think you will or not. You're going to pay attention more if you have something to lose because it's just a natural like defensive uh, instinct. And
Mm-hmm.
I am undoubtedly a proponent of what you said of at least just putting on something, some small thing where it doesn't even matter if it's $5 of it could be $5. I mean, you losing
Right.
$5 still make you feel like, okay, well, just lost myself a, I don't know, a 4 count nugget meal at McDonald's. I don't know. You could have had that instead of losing the $5, and it's going to make you just want to, pay attention and see, okay, well, what could have I have done differently there? Why did I lose that $5? And
All right.
at least for me, anyway, for me at
Yeah.
least, I
No,
think
that's a,
that's the case. Yeah.
that's a great way to put it. That's a great way to put it. But yeah, and that's a contentious debate among a lot of people. Like, what's better, just to stay in a monopoly money account, a demo account, or just to start jumping in and bet no small amounts of money. Uh, what was I going to say on that?
Yeah.
I had a clever thought. But yeah,
Dang.
That's the point. That's when you learn. That's when you reinforce the learnings. Is when you have real money. Why do you think all the time when people make a lot of money on their monopoly money, their demo account, and then they flip to the real thing, they flop and fall on their face?
Mm-hmm. Right.
It's easy to pull the trigger when you ain't got real money on it.
Right.
It's easy to tell.
Yeah, man.
It's easy to tell ourselves a story. I probably wouldn't put real money on this, but it's a demo account. I'm going to be okay with it. And then you actually win that trade that went against your rules. And then you think that you're the smartest person ever. But then you go try to pull that same stuff when you get your live market, and then you fall on your tail. So yeah, the point is, just test the waters and just slowly dip those toes in earlier. Get real money on the line. That's when you learn the lessons. When you lose those,
you want to know. You want to know something? I knew that there was in my head. I've been trying to think of this for a little while now, like an analogy, not like an analogy, like a comparison to the markets in which you can compare, like a challenge account, like we have here at Hola Prime, or like a direct funded account here at Hola Prime, versus like playing with your own money. And I feel like a really good way to compare, and also combining it with what you were just talking about, with having a little bit of skin in the game. It's like buying a challenge account through Hola Prime, or like a direct funded account through Hola Prime, is similar to doing something like buying a call option in a stock. It's a fixed cost that up front. You know what your maximum loss would be. It's how much you just paid for the account. But the upside potential is unlimited, just like you would have in a call option. And what it does is, when you purchase an account and you participate in a challenge account or a direct funded account with us, what you end up doing is there is still risk on the line, because you have that, call option premium per se of purchasing it. So there's some money to be risked. You have an incentive to do well, to not lose, the upfront money into the account. But then on top of that, there is infinite reward that can be had if you learn to trade well, and you develop the skills, and you build up the reps, and you just keep putting the reps on, learning how to manage the risk, get relatively good win risk to reward trades on, and you're winning a little bit more than you're losing every single time, whether you start out small with a small position, medium positions, or maybe you want to start out with larger positions. If you're a beginner trader, I would say start out with the smaller positions, of course. Staying in the market, having a longer period of time in the market is better than being kind of like 3 trades and done, and then your challenge account's blown up. So I would recommend starting off small at least. But I think that's like a relatively good comparison. It's almost like it's just like buying a call option. There's some risk to be had because the premium that you're spending your money on, but at the same time, there's just unlimited reward if you can build up the skill. So, so because I just thought that was like a good like segue into understanding kind of what we are trying to accomplish here at Hola Prime in general. Just we're trying to provide opportunity. There is an upfront fee, but there is a very good opportunity to make some money and become a really successful trader. So yeah,
Yeah. No,
yeah,
that's true, man. That's true. But
yeah.
yeah, you gotta fake it till you make it, right? Yeah. That's an old adage. Now, a lot of people like that. Some people say, well, if you fake it till you make it, that just means you're being fake. So there's an argument either way, right? I've heard both sides, but the point is, give yourself a reputation to uphold, right? Meaning, go out and just test the waters. You got to do it.
Right, right, yeah,
A small amount of
yeah,
money.
yeah.
You got to see yourself there. You got to see that you're being successful or that you're making money. So you got to see it before you actually act it out. That's
Yeah,
one
and
way to
I
do it.
wouldn't even, and I would say it's more like it's more like understanding if you for example, like if you lose if apologies, hold on one second here. All right, switching over here. Okay. If you just apologies, I just had a notification pop up. But
Mm.
if you like were to lose a challenge account, for example, um, it's more of it's more of like a understanding that there's more to learn instead of like a
Mhm.
you know I would say instead of like a faking it to make. I mean, I know exactly what you're talking about, but like at the same time it's like it's kind of like a realization, like, okay, I need to put more time in, or there's something I'm not there's a lot of something or a lot of things that I am simply failing to see, and I need to do more. I need to be a little bit more inquisitive with the markets. I need to be a little bit more inquisitive with my own self and my own
Yeah.
brain. Why am I deciding to make, why am I deciding to get in these trades? Um, it isn't my own money that I'm trading with necessarily, but even with purchasing the account and having that fixed cost up front, I'm still, maybe there's still some nerves. Maybe, why am I getting nervous to put on this trade? Is it because even with this account, I'm putting on too much size? Maybe I become more comfortable with less size, or maybe I simply don't really have a good, like a strategy that I'm following. I'm kind of just winging it, or there could be a slew of reasons for
Yeah.
when you are real with yourself as to you know what your trading journey is currently looking like. So, and that's kind of
Yeah.
just
And
what
there's,
you can learn through an account like these accounts. So you can learn a lot of stuff about yourself and your trading. So
yeah, and there's nothing wrong with blowing an account either. I mean, we obviously the goal is to help you not do it, but I've blown accounts. I mean, it's kind of like the rite of passage in a way, but it's made easier now
okay.
because you guys and gals can learn from our mistakes essentially. So, but that me blowing my account taught me more than anything any instructor ever taught me, as far as risk management goes, risk reward management, right? So, um,
Right.
no, it's good stuff. Um, but I just thought I would real quick share the economic calendar. So yeah, these are the reports
Sure.
I
Yeah.
led off the show with. The Swiss franc, they had their CPI number come in just barely cool, okay, by 0.1%. And then obviously we had the negative reports on the employment numbers for the dollar, but then that PMI data kind of shook things the other way temporarily. So, what have we got tomorrow? Can you take a guess what we got tomorrow that might be of importance, Paul?
Oh, I don't know.
Any,
Maybe the non-farm payroll. Maybe the
uh,
unemployment rate. Maybe.
oh, no, yeah, no, that too. Yep. Right there, ladies and gents. This is let's call this the Super Bowl champion of economic data releases, right? The non farm employment
Non-farm
change,
employment changed. Yep. Yep.
right?
Yeah.
Why is that important? Well, let's go look at August 1st. August 1st is the last time that report came out. Let's just look at the dollar. Let's see here. Get rid of my drawings real quick. Can anybody guess the candle that formed out of that last ADP just by looking at that chart? Okay.
Right.
That's the Dixie.
Right.
This is the dollar index. So just imagine all the U.S. dollar currency pairs are going to have this same thing. But yeah, it came out. And what did we have? Let me just go back to it real quick. Labor data. I'm sorry. My gosh. Yeah, labor data. No, NFP. There we go. I'm going to copy and paste this over real quick. Oh, good grief. Sorry.
No, you're good.
Well, the important thing, I got so many windows and I have two screens to use them on. Two screens. So I keep getting stuck on some things. All right. So here's NFP. So this was the last, several releases. Right. So what happened the last release? Well, there was a forecast up here in the 100,000 range. Say 100,000 new jobs expected, but they bombed it and they had 25% less, so 73,000. So that being negative for the dollar, that's why we had everything drop like crazy. Okay, there's the dollar index. Let's just go look at dollar yen. Dollar yen is the highest ATR pair for the dollar. Look at this ugly thing. So this thing dropped 194 pips. I think 196 pips.
Wow.
Let's call it 200 pips. That was just in the first hour, and then it dropped even more. Let's take a look at that whole range, actually. So that whole range throughout the course of the day was 350 pips.
It's crazy.
You think that might have ruined a few accounts for the people that were down here trying to buy the dollar? Yeah. People that don't use stop losses. That's what you call a reverse squeeze. This came
for
down
real,
and
man.
took out a lot of accounts. So point being, you just be careful when that report comes out. So yeah, that's dollar yen. Euro dollar is going to look the opposite. If we go back to it's going to look the opposite. Euro being the base currency. So there you go. Okay, the dollar dropped. That means the euro popped. And that even popped, I think, 150 pips, if I remember right. Yeah, 150 pips. So this is going to be the biggest one until we get to, we'll see what the interest rate decision does on September 17th, right? So that's coming up in 2 weeks. But I just wanted to give you guys a visual on what happens with this NFP report. It's just a crazy. Look at this. Pound dollar and euro dollar was the same. So we had a nice strong downtrend. What happened? Well, that report come out, dollar down, pound up as a result. And then we started a whole new trend. So the point is the NFP report on its own can really stop a trend in its tracks and then reverse it and cause an opposite trend.
Yeah.
Okay, same thing here.
Yeah.
We had an uptrend. Boom, it pushed everything down on the dollar yen. Aussie dollar, we had a downtrend. And then boom, that candle hit right there and pushed it up. So just be aware of that. I'm not saying it's going to start a new trend on all the dollar pairs and dollar crosses, but it possibly could. New Zealand dollar was down. NFP came out, pushed it up. Dollar Swiss is going to be the opposite. So it was an uptrend. NFP came out and just caused it to go sideways forever before finally rolling over slightly. And then finally dollar CAD, we had an uptrend. NFP candle was right there, and it just messed it up for a few weeks, right? It finally did kind of catch a bid. But yeah, I just wanted to point that out so that you guys hopefully know that you'll want to be careful before, during, and after that report. If we go down to like a 15-minute time frame and just go back, let's see here, go back to that report. Yeah, so here we go. Let's just go back to the dollar yen just as an example. a good way to know if you think you might be in the clear, right? When you get the volume start going just sky high, you're going to definitely want to wait till this thing starts to slow down, till the volume starts at least getting close to where it was prior to, right? If your volume is still way up here and you're trying to find a trade, just be careful because a lot of people get chewed up there as well. So sometimes it may take a little bit more time, maybe an hour, maybe an hour and a half, maybe 2 hours before the volume starts to, balance itself back out. So, but that's just another visual I wanted to show. I mean, there's a lot of people getting chewed up even after that initial drop because you got people trying to catch buy orders, buy. Well, what happens? Just pushing it down. So, yeah, just thought I would point that out just so you guys know that that's coming tomorrow, whether we like it or not.
Yeah.
Yeah.
Very, very, very important day tomorrow. Tomorrow is going to be, I have a feeling it's going to be a very, very volatile, very interesting day in the futures markets for sure. There's going to be a lot of trading on behalf of myself, Coach Daryl, Coach Sam, Coach Tony. I know we are going to be flying in and out of trades tomorrow, I bet. I'm definitely going to be awake and watching the markets as soon as 8:30 hits, get a feel for the order flow, understand, what that first move is, and maybe see if it gets reversed or not, depending on whatever the data is that comes out. But yeah, I'm excited. I think tomorrow's going to just be action packed, and I can't wait to do it. Be on stream with everybody. Can't wait to honestly see see what the chat's trading to, and what their what the polls are and everything. So it'll be fun.
Right at New York City Open as far as the stock market, 8:30 New York time. So
yep,
is that right? No, I'm sorry.
Yep.
I guess that would be 7:30 Central. So that's 8:30. Oh, they open at 9:30, right? New York time.
Yeah. So New York opens at. Sorry, I thought you were just saying when the opening or when the news came out. So yeah, 8:30 a.m. That's 1 hour before the opening at 9:30 a.m. Correct.
Yeah. So that's going to be fun. Did you want to share your trade, Paul?
I'm out of my trades now, but we can just share my screen in general. I switched to my other challenge account at the moment.
I got to run to the loo real quick.
Yeah, definitely. We can share my screen now.
Yeah. Okay, perfect. I'll be right back.
Awesome. Yep, I'll see you in a minute. So the NASDAQ just rallied big time here. We had a nice little, you can definitely see this very clearly, a nice little wick down on the 1 minute and the 5 minute, I believe, if you look at the 5 minute as well. Yep. Beautiful wick down into the VWAP. VWAP wasn't really necessarily a level of, and I have the VWAP line starting at the overnight session open at 6 p.m. Eastern. So it didn't really act much as like a support or resistance necessarily too much, in these first 2 hours or so. But it looks like now, could possibly be an area of or a indicator of support. But coincidentally, it also does line up with this relative area of resistance here that we saw between 7 p.m. and 7 p.m. and 8 p.m. Eastern. So do with that what you will. That was a very nice bounce. To be honest, there was a lot of sellers, aggressive negative delta right down here. So anybody that saw that and then the push didn't occur and got long immediately, kudos. That's a good trade. Very good trade. I wasn't paying attention to it unfortunately. I just had my eyes set on gold again, which we can look at here. Essentially, what happened was we had this kind of like, ascending triangle of sorts that was forming for essentially 2 hours, and then we finally broke out of it, but to the downside after testing the resistance area of 3614 four different times. We finally broke out of that triangle to the downside here, but we're popping back up a little bit. So super aggressive selling delta between the 3609 and the 3605 area. There was a lot of negative delta that brought the market down to 3605. So I wonder if some of those shorts, this quick pop back up here that we got, is it going to be a little bit of a sustained rally, or are the sellers going to not be, as flimsy and allow for the market to kind of turn back over, maybe do like a little rounded turn, and we continue to the downside, maybe into the 3600 area? Or do we see sellers simply the aggressive sellers that came in here from 3609 to 3605? Are they like short-handed, or they're what you could call, like, as the kids say, the paper-handed short sellers, and then they immediately get out and their stops get triggered, and then we see new buyers step in and push the market higher? So time will tell. Maybe we'll see, the result of this in the next 20 minutes or so before our session ends here. I can't believe we're already at 10:42 p.m. Eastern time. Crazy. I see you're back,
Right.
Tiger. That was quick.
Yeah.
But yeah, so I was just looking at gold. I just did a little recap on the gold and NASDAQ. NASDAQ had a ridiculous rebound in these last 10 minutes. I was showing them just recently here.
Looks like
look at that sucker right off of VWAP, right off of that previous resistance from 7 p.m. to 8 p.m. there, and just off to the races. So these overnight markets have been quite volatile, and a little bit hard to predict, to be honest, as of this week between Tuesday and today. Not the greatest trading on my part this week, but is what it is. I gotta take the punches, gotta roll with the punches, especially with gold right now, man. Gold is just wicked. It is a wicked one as of recently. Congrats to all the longs out there in gold over the last 2 weeks. My goodness, did you make a bunch of money if you were long gold for the last couple of weeks?
That's true, goodness. Man. I just couldn't find my zones to get in. I mean, nobody knows, right? But I figured it was going to break that top because of the strong bullish fundamentals, but I just couldn't get a zone balance. It just kind of was reversing on its own, right? Just because of the strong signals itself. So I was like, dang it! I saw that big move coming, but I didn't want to. I'm proud of myself because I didn't break my rules and just willy nilly take a buy. I mean, it sucks. Right. I missed those moves on gold and silver, but I stayed true to my rules. I mean, if I would have gotten into those trades just buying at some random place, then it would have been kind of a false victory. Obviously, right. I figured the fund was going to push it up, but I didn't obey my rules by buying in my demand zone. So, kind of a bittersweet thing. It's like a moral victory without getting paid.
Right.
But so I'm in this same predicament because, like, obviously I'm requiring for my trading plan that I get, like I said, that 7% discount on silver and then the 3.5% on gold, so I can hit a zone. So we'll see how it goes. Yeah. But I am.
Yeah.
Do you ever do any of the bets on like DraftKings or FanDuel or anything? The
I
sports
do
betting.
not actually, but I don't because in
Oh,
Florida you can't. Unfortunately, it's Hard Rock
oh,
is the
it's
only one you can use.
oh,
Yeah.
okay, okay. I wasn't sure if Florida
Mhm.
was a legalized state or not. Yeah, Kansas is, but the people, so Missouri is not. So the people that, like friends of mine that live on the other side of the
Uh,
border, they literally physically have to drive across the border so that their phone recognizes they're in Kansas, just so that they
that's
can place
crazy.
their bet. Yeah, because like I'm only 10 minutes from the border, but yeah, I got friends on the other side, and they're doing that. They have to constantly come to the gas station, come to the Quick Trip or
Wow,
whatever, just
dude.
like across state line. Yeah, just to physically be there to place their bets. So it's just kind of comical,
So
but
so like literally what you do is what they do is like they'll go to Kansas. They create their
yeah,
account while
yeah,
their thing is in
hmm
Kansas, and then every time they go back home, it just says like you can't because of where you are, and then they just go back. They make the bet. That's
yeah,
hilarious, dude.
yeah.
That
So
is so funny.
so and they can't use their Missouri address, so they'll have to use maybe their mother lives in Kansas, or maybe a friend, maybe one of us friends live in Kansas. Then they can just create the address with the Kansas
Oh
address and
my
get away with it.
gosh, that is
Because
hilarious,
yeah,
man.
it all runs off the GPS, obviously, knowing which state you're
Yep.
in. So, um, but anyway, yeah.
Wow.
Having said that, tonight's obviously the first game of the NFL season, so I did get into this game going on right now. We got the Eagles and the Cowboys. So it's a four pick parlay where I needed Saquon Barkley to get a touchdown, Jalen Hurts to get a touchdown on the Eagles, and then Javonte Williams on the Cowboys to get a touchdown. Well, they got their touchdowns. So now I'm just waiting on CD Lamb for the Cowboys to get a touchdown. If that's the case, I'll turn my $5 into my $5 bet into a $110 bet. So I just
Let's
need so
go.
I'm basically cheerleading for CD Lamb at this point with a whole quarter
Yeah,
left. Just give me a
that's
touchdown and pay
hilarious.
me. Yeah, yeah.
And,
It's
and
it's
on
just something fun to do.
is this the first game of the season? Is this the
Yeah,
first game of the season? Yeah,
yeah.
wow.
The
Jeez,
opening
that's
night.
I don't know why I felt like we were still in the preseason. Like I just my time is escaping me. I'm just constantly being escaped by time, man. It's crazy. Already here.
Yeah,
Jeez.
summer flew by to
Oh my
me.
goodness.
I mean, with getting
Yeah.
onboarded and everything, and getting into the flow of Ola Prime, it's just seems like the days have been flying. The weeks have been kind of flying by,
Oh, for
and
sure, man. For sure. Same here. Same
time
here.
flies when you're having
Sorry, but
fun,
Matt,
right?
real quick. He was
Yeah.
I was when I was talking about the Nasdaq, he caught the long
Oh, nice.
off that VWAP bounce. So great trade, man.
Okay,
Good trade. Really good
good
trade.
deal.
That's already we're up 20 points in the last 20 minutes here on that. So big time win, big time W for sure, for sure. That was really
That's good
I
stuff.
mean, and it's kind of funny. Like if you were looking at this from like a kind of like a trend line perspective, like if you were to draw a trend line, this is why nothing is perfect, right? Like there's no process that's perfect here. But generally speaking, if you were to kind of draw a trend from the 6 p.m. Uh, the 6 p.m. like start again, essentially the 1 hour break that occurs in the futures, uh, and you were to just draw that trend line from the 6 p.m. start, um, you would have, like myself, gotten long on the retest of that like trend, that kind of trend line, and then get stopped out. But like here, a trend line didn't matter. It wasn't about the trend. Like the overall trend is up, right? So we are long biased, and I was long biased. But the point
Mm-hmm.
is this is where understanding, I think, just relative. This is where I could have been better in my long that I got stopped out of in the NQ. What I needed to recognize was the fact that, an area of previous resistance was this 23,712 to 23,716. I needed to understand. So here, I can just draw the box here. In the overnight session, generally speaking, this was the area of resistance. It just because that trend line broke didn't mean we were going to continue. We were going to, start to curl over, right? We needed to get down into an area where there were previously, a lot of sellers in the overnight that then got blasted through by buyers, and whether or not we could see the buyers, come back in at that level and hold for the just the general uptrend that we've seen over the entire regular trading hour session and the overnight session.
Mm-hmm.
And and Sire Mamet is exactly, and was 100% right for waiting for that kind of that opportunity to present itself. Let's put it that way.
Mm-hmm.
My eyes were unfortunately constantly I was between NQ and gold constantly there. And, you just miss that in like a couple minutes time. And then you're already, it's already bounced 10 points and you're wondering, okay, well, now the risk to reward feels like almost like close to a 1-to-1. What am I, should I get in? Should I not? But if you're watching it closely, there was definitely a really good opportunity there, especially when you're looking at the order flow and you saw all the negative delta trapped down here. So Simon Matt says he's still in it. VWAP is reliable. Need a wider stop for NQ. Yeah, that's for sure, my friend. I agree 100%.
I love VWAP.
It's funny because I'm more of like my focus in the equities has always been the ES. So I am getting used to NQ as of the last few months. I've been getting a little bit more used to it. I am learning its personality a little bit more. I appreciate the advice because I do agree. Its volatility is not to be reckoned with. You need to give it some space. You need to give it a little bit of respect. Got to put some respect on its name. So
yeah,
100%. Definitely a good learning experience there, especially in this overnight session. I really liked that. I like that analysis, and I can definitely log this one in the experience book and move forward with it and be better next time. So.
Well, no, that's the same thing I went through the last couple of weeks. I think maybe I mentioned it with Tony last night, but yeah, with me doing 4-hour, 2-hour, 1-hour supply and demand zones, I tend to just keep a few pips leeway for this stop loss. Because I got such a wide range of the zone itself. But yeah, I kind of brought that same mentality initially back down to these smaller time frames that have been dusting off of my trader shelf that I haven't used in a long time. But the reality is, yeah, it's a little squirrely. It's a lot more squirrely. There's a lot more noise. So I basically figured out after 3 or 4 losses in a row, you need to add a little more of a stop loss. You need to add a little more of a wiggle room. Because of all the noise. Knowing these things, I just stayed stubborn. Like, my 3 pips, my 5 pips works just fine. But when you have a 30, 40 pip range on your demand zone or supply zone, because typically if a zone works, because it hits the zone fairly quick and does the reversal. But you don't have that much leeway on a 5 pip range or a 10 pip range. So Here I am. Just adding in my normal higher time frame 3 to 5 pip stop loss and just getting pegged out. And I had 4 of them in a row last week where they just stopped me out, but turned around and ran in the direction that I picked to begin with. So I was right. I was just wrong on my risk management.
Right. Right.
So,
Right.
so good lessons. Yeah, great lessons.
Yeah.
Hey, coaches learn
Yeah,
too.
man.
For you guys and gals in the
Oh,
chat,
dude.
we I'll be 12 years old in January, right? 12 years old as a trader. So I'm just a preteen, right? That thinks he knows everything, but then gets humbled. So that was me last week, trying to pinpoint my
Yeah.
stop losses and not give them any wiggle room, right? So there
Yeah.
you go. Talk about transparency. There
Yeah.
you go.
Yeah, man. No, of course, for sure. And Siren Matt actually just was, yeah, and I appreciate it, man. I try to, I try to help and teach as best I can in any way that I can. So I appreciate your kind words there, and ATR
ATR.
playing a big role.
Yes.
I think, what's funny, man, Sire, is I don't use ATR a bunch, or like I have it on my, it's funny, I have it on all of my charts, right? So I have it up all the time on all of my
Mhm.
third party brokerage charts. So I'm always can see it, but I don't, like, generally speaking, use it very often. But I think you're right, man, in terms of using it for especially for the NQ, helping to understand that risk to reward, and I think that ATR, I genuinely do believe that it probably plays a bigger role in especially in something like the NQ, and can kind of help put a little bit more of the guardrails on for the intraday trading, and understanding, what kind of risk you can be looking at in some of these more like volatile days. But yeah, man,
Right.
I'm right there. I'm right there with you. I think I need to pay attention to the ATR more in the NQ for sure. And I'm definitely going to I'm going to also transition that, I think, into gold as well. I'm going to look at the ATR and gold more because of just how volatile these two products have been as of late. So,
Yeah.
so yeah,
Um,
very good point, man.
yeah, and I don't know so much in the futures market like Coach Paul trades, but in the currency market and Forex world, that's the first thing, sire. That's the first thing I look at when trading a currency, because I like to stick with. I personally prefer to stick with trading pairs that move at least 80 pips, 90 pips, 100 pips a day. So yeah, I'm always starting off with that daily ATR to see the range. Now I pretty much have them all figured out by now, but I like to position them on my chart. I suck at currencies, Cyrus says. Hey, that's okay. That's what we're here for. You got a coach, you got a futures guy, you got a Forex guy, so we'll pull you along. But no, that's actually, as far as Forex goes, when I put all my charts on my watch list, like every time you guys see me cycle through my currency pairs, they're literally listed from top to bottom with the highest ATR down to the lowest. So I do that on purpose because I personally prefer to trade the higher ATR currencies. I want something that's going to move. I don't really like trading stuff that's going to move slow like molasses, right? Because it might take an extra
Right.
day or two or three to make the move I want to see. Well, if I'm getting into trades typically on Tuesdays on average, especially with the currency, or especially with the geopolitical climate we're in today, I want to be the hell out of my trade by the time Friday's intraday session ends. So
Mhm.
it's hard to get in and out of a trade, 2 or 3 day trade on something like a pound, a euro British pound currency pair, because it only moves 40 pips a day. Whereas I can trade a
Yeah.
dollar Japanese pair that moves 120 pips a day. So I've got a much higher chance of, when price hits my supply or demand zone, I've got a much higher chance that it's going to move my 2 to 1 or my 3 to 1 reward to risk to get that profit, taken. So no, I like where your head's at there. Again, I don't know how it works necessarily on the futures market, but in the currency world, that's my everything. That's the first thing I look at is
Yeah.
ATR. So, well, dang it, we are out of
Well,
time, Mr. People.
yeah, exactly. We are out of time. Thanks for stopping by, guys. We appreciate it. Sire, it was a pleasure talking to you here. And and we'll see you tomorrow morning for the Forex Fire session as well as the Futures Takeoff session. So please come and join us, and have a good night, and we'll see you tomorrow. I'll see you, Tiger, next week. All right. I'll see you next week. Have a good weekend.
Absolutely. I'm gonna go watch CD score a touchdown so I can win my $110. You guys have a good one.
Let's go. You too. See you, man.
All right, later.
Hola Prime, trade with transparency.